Welcome back everyone to the Moneycontrol live stream. It's been a milestone day, guys, on the Lal Street with the Nifty 50 finally re-achieving its lifetime high after a 13-month wait and 4 attempts. Yes, as many as 4 attempts it has taken the Nifty to reclaim the lifetime high since last hitting it on October 19, 2021. Now, if you look at the setup at this point of time, clearly Sensex and Nifty both trading in record high territories, shrugging off the weak cues that were emerging from Asian markets earlier this morning. But the outperformers of the day, of course, have still been the small and mid-cap space. That is where most of the bullish momentum you can see there, and they are actually contributing to the very healthy advance declines ratio that we are seeing on the street at this point of time. Also, crude oil prices benefiting the bulls at this moment. Brent futures are down about 2% in trade. Clearly, it looks like the Brent futures are headed below the $80 per barrel mark for the first time in as many as 10 months. So clearly probably hitting the lows of 2022 very soon. Of course, it's a milestone day, of course, and we wanted to have a very, renowned guest, of course, to get your thoughts and your questions to him and understand from him what it means for the market here on out, since we have already achieved the landmark of lifetime high. Joining us today, of course, is Abhay Agarwal. He is the co-founder of Serica Advisors and a portfolio manager within his own rights. Thank you so much, Abhay, for joining in.
Chiranjeevi, for having me on your show. I really enjoy your show. I think real fun show. So I'm glad to be invited for the first time.
Thank you, Abhay. Thank you for those kind words. Now, of course, first of all, I need to ask you, how are you feeling? We are finally, it's been a 13-month long wait to come back to these levels. It has taken a lot. A lot has gone on in this past 13 months. A war has broken out, record high inflation, record high interest rate hikes. Lot has gone on. So how are you feeling? Are you feeling relieved, or are you feeling that probably this is the beginning of something very long term and tangible?
Well, Chiranjeevi, for me, it is like deja vu all over again because I started my investing journey in '93. It's been 28 years. And, I remember the Nifty index was launched in '96 or about that
Yeah.
time, and it was at 800, and it fell after that to 700. So I've seen Nifty, from that time, and I have seen, multiple all-time highs. So yeah, of course, it is nice to, as long only managers, to see these highs and also know that the journey to the next big milestone will not be easy. It will be volatile, and I think the always once again a lesson to investors is that to stay invested, do their homework, and make money, make wealth by staying invested. I think that's the key thing because markets will be volatile. They've always been. They will be going forward also. So yeah, it is more than a feeling of relief. It's like look, this was bound to happen, so it has happened.
Well, wise words there, Abhay. Of course, I have to ask you, now that we are at this, summit, where do you go from here? Of
Yeah.
course, 2022 is about to end. We're just a month away from the year's end. It has been, although, taking aside the volatility, it has still been a very decent year. We will probably end the year with high single-digit returns on the
Yeah.
index at least. But going ahead, looking into 2023, what is your assessment as to how it might shape up for Indian equities market given the entire global scenario at this point of time?
Yeah. So I think in equity markets, valuations chase earnings. It's always the case, and maybe for short periods of time in between, that relationship gets broken, causing a lot of volatility. But if you look at medium to long term, if earnings grow, valuations stay elevated, and there is always investor interest. So from a global investor's perspective, I'm very sure India is a very attractive opportunity for the next decade. And I'm not saying that because it's almost cliched, but we are seeing interest from first-time investors in India, from Europe, large family offices, small family offices, funds, who are asking us that, how do they invest in India? They're trying to figure out their way to get in, through which entity, which vehicle. So we are seeing those flows come in because there is a consensus, almost emerging consensus, that with its various demographics, growth, for next decade will be a good place to be in India. So my view is that if the corporate earnings stack up and do not disappoint, and I have no reason to believe that they will disappoint. I think there will be mild volatility here and there, but overall, if I look at 12 months high, I think the Nifty earnings should be 20% higher than from where we are. So which
Right.
means that there is good upside to the index still. So I won't be surprised at all to see the Nifty crossing 20,000 sometime early part of next year.
I mean, Abhay, that will be great if we do that. You touched upon earnings, of course, and one sector that has really been doing the heavy lifting as far as earnings is concerned the past 2 quarters is really the banking space. And
Yes.
that is also the sector that has really led this rally, also the second leg of rally that we have seen since probably the bottom that we made in June, where we were sitting at a 52-week low at that point of time. Now, do you see this sector, continuing the outperformance in 2023? Because generally we have seen that, year on year, sometimes leaderships tend to change in bull markets, even though from a longer term point of view they may remain among the best. But from a year on year perspective, sometimes leaderships continue to change because last year it was IT, this year is banking. What about 2023? Do you expect banking to remain the leader?
Yeah, I think banking will will stay at close to leadership position, if not
Hmm.
leadership, because I think India is still so under penetrated in terms of banking, both corporate and retail, that if the GDP grows at 7%, the overall banking space earnings will grow at double of that. So the earnings will be clear and visible in large banks. Now, the large banks are already at valuations which I won't say are elevated, but on the higher side. So
Hmm.
I think there will be action that will shift in banking space to mid and small banks, regional banks also privately owned, that have a very solid liability franchise. So they have the ability of generating CASA, and at the same time have cleaned up their act on the asset side, so have become good lenders, have adopted good lending practices led by new leadership. So I think those are the banks that investors should look out for, because these banks will grow at probably 30% for next 3 4 years.
Wow.
So I think, and these are banks which are still trading at close to 1 time book value compared to large banks which are closer to 3 times book value. So I think there is opportunity there in the banking space. And other than that, I think I think the domestic consumption will be a big story, because as the
Hmm.
markets have opened up, our dealer checks, we are seeing, especially in tier two and tier three cities, a very solid demand for stuff like home improvement, better tiles, better paint, better whatever you call it, because for last 3 years, post-COVID, pre-COVID, there were no home renovations. So that is picking up. We're seeing good demand coming in for that space. And then with a meltdown in crude prices, inflation coming off, I think some of the auto two-wheeler stocks will come back into the play. So I personally think that autos will do well in the next year. And lastly, I believe that large mid-cap IT companies will also pick up, after the correction they have gone through this year, because that is the, like a decade-long story for India,
Hmm.
the IT exports.
Abhay, I think mentioning IT in this list is clearly a bold bet. So clearly, sticking your head out there as far as sectors are concerned. Now, I can't help but notice the storyline here, Abhay. Of course, we are hitting record highs on a day when probably we are seeing the biggest political protest that we have ever seen in China. Now the
Yeah.
entire theme, or at least the second half of 2022, has been about how China is becoming increasingly uninvestable and
Yes.
how India is increasingly taking its place in the
Yes.
global investment pecking order. And therefore it's just I mean, it's probably funny and it's coincidental that our record high should happen on a day like today. Having said that, how do you see this entire, what is your reading of this entire China plus one theme? Is it just a fad that is, probably a child of the pandemic? Or do you think that this is something that is going to probably continue and become a theme of this entire decade?
Uh, So I think, first of all, when the global investors see India versus China, they see a market in India that has a $3 trillion market cap, and they see China plus Hong Kong, which is close to $18 trillion. So these are size-wise very, very different
Yeah.
markets. So when they look at it and they say that, look, where is the probability of making money higher? Where can I double my capital in next 5 years? Then of course it's easier for 3 to become 6 rather than 18 becoming 36. So I
Yeah.
think that is one thing that is attracting financial investors to India. On the China plus one theme, during COVID times and the supply chain disruptions, already we saw that the supply chain buyers, consumers in the West were shaken up. And but post COVID, they started building the belief that, look, let's not ignore China, let's go back, because that's where the large scale is. That's where years of investment has taken place. There is pricing advantage. So let's go back to China. But I think last 1 month, what has happened again in China and still happening has again shaken that confidence. So I think for India, it plays to our advantage now. So it is an opportunity that has been presented to us. Now it is up to us how well we play it, and that is where we need government support. We can't do this by ourselves. So the PLI scheme, if it sees more aggression from the government at the right time to create bigger companies, subsidize international companies like Foxconn, Winstron to come into India, manufacture
Right.
in India. I think that will go a long way, not only in electronics, but pretty much everything that touches supply chain for the Western world and for Indian companies also. So I think it is a golden opportunity presented to us on a platter. Now it is really up to us how we benefit from it.
Absolutely, rightly, said Bhabhe. Of course, it's an opportunity, but we have to grab it with both our hands. That said, specifically, speaking about opportunity, which are the sectors, or if you're comfortable sharing stocks as well, would you think that probably would benefit the most out of this, narrative that is emerging in terms of China plus one?
Yeah, I think we are seeing some of the companies that used to import from China. So we have, again, full disclaimer, portfolio company Dixon, which is an outsourced manufacturer. It competes with companies like independent companies like Foxconn, Winstron, and manufactures mobiles, TV sets for international brands. So companies like that who are replacing imports from China for simple stuff like mobile phones and TV monitors, laptops, computers, and even for 5G equipment, because the government tender this time for 5G is very clear that they need to source as much of equipment from Indian companies as possible, if not all. So companies like that, then companies that are into manufacturing, home improvement, which is a theme I touched earlier, where they were exposed to competition from Chinese products which were not high quality but much cheaper. And now
Right.
suddenly customers are finding that, look, so companies, in domestic plastic pipe industry, plastic fittings, panels, so, and in, of course, in chemical, so that's the other place we see demand coming in from for Indian companies from international buyers is chemicals and bulk drugs. So I think there are multiple aspects, multiple ways that this can be played by Indian companies. But again, as I said, they have to be creative. They need to take the initiative. They need to put their money where their mouth is to really benefit from this.
Absolutely, Abhay. Thank you so much on that note. Thank you so much for joining us and sharing your gyan, of course, your feelings with us on the show. And hopefully, a great evening awaits you now that we have hit the record high. Probably, a champagne bottle will be popped in the office.
Yeah, I hope so. Look forward to that.
Great, great, great. Thank you so much for joining in.
Thank you, Chiranjeev.
Well, there you have it, guys. Of course, Abhay Agarwal sounding as optimistic as ever. Of course, why not now that we are sitting at record highs? That said, moving on. It's been 13 months, but a lot of stocks have contributed to Nifty's journey from about 18,604 to going down to as low as 14,800 at one point of time, and now coming back again to 18,600. And there were 5 stocks which were the leader. Of course, Adani Enterprises would have been part of this list, but Adani Enterprises joined Nifty only in September, so it would be a little amiss to add it to our list at this point of time. But if you look at the other 5 stocks that really contributed to this journey, Number one, and those are the stocks that I really want to talk about today in our stock take section. Number one, of course, and the surprise package of this year, it has to be ITC. Yes, the meme stock of last year is the champion stock of this year. ITC, the best performing stock on Nifty, if you look at it from October 19th last year, more than 40% gains on the counter. Now, what about the outlook going ahead? How will the stock perform going ahead? Well, the outlook at this point of time seems as rosy as it was, say, day before yesterday. Analysts are expecting very strong earnings from the cigarette division. The hotel division is doing quite well. The paper division is doing quite well. So overall, the outlook for the consolidated entity remains quite strong. But the trigger clearly for the next leg of re-rating for ITC would be the proposed demerger of the hotel business. Now, ITC has given sound bites to that extent that they are looking at some sort of plan to demerge the hotel business, but we have not yet seen any concrete steps. When that happens, we'll have to wait and see. But whenever that happens, clearly that will be a strong trigger as far as ITC is concerned. But in terms of risk, of course, the budget is coming across, and whenever the budget is around, investors in tobacco companies tend to get a little jittery because there is always a chance of some sort of taxation coming in or not. So whether it comes around this time in the budget, there were fear that last time around certain increases could be mulled on tobacco taxation. That did not work out, and we saw a very handsome rally in ITC. We'll have to wait and see. You might see the stock getting a little nervy around the budget day, but I think overall the outlook for ITC remains quite strong. Second on this list is Mahindra and Mahindra, the best performing automobile stock, of course, from the large cap arena in 2022. And generally, of course, you would think that if M&M is doing well, it's largely their tractor business that is doing well, right? But in this year, the case has been for the automotive side of the company. Its passenger cars, its SUV have been a runaway success on the road, and you can clearly see it. Probably a lot of your friends and your neighbors are already owning an M&M at this point of time, or at least waiting for one. And I think that is where the strong earnings growth outlook is coming from. The SUV business of the company, the automotive division, is clearly the one driving the earnings performance for M&M. And going ahead, of course, the key would be any sort of improvement on the tractor side, because the tractor business is a little bit consolidating at this point of time. The outlook there seems a little murky, given the fact that the rural economy clearly is not functioning at its pomp. The hope is that the rural economy will recover next year, and I think when that happens, you will see the tractor division also adding to the earnings growth outlook for M&M. Third stock from the telecom space, surprise, surprise, yes, one of the most boring sectors, actually has the third best contributor to Nifty's gains this year, and that is Bharti Airtel. The stock has been a consistent performer, come what may, whether there is war, whether there is inflation, but Bharti Airtel has been there and thereabout, providing consistent returns to investors. And of course, in terms of outlook, the outlook for its ARPU remains quite strong. The management indicated that they would want to cross that 200 rupee ARPU level in FY23, and by all indication, it seems like they might be on course to do that this year. Axis Security suggests that they expect margins to actually expand going ahead and continue to do so at least for the next couple of years on the operating margin side. The only concern would be any sort of wobble around the 5G launch. Of course, competition is tough there, with RIL also committing heavy amount of investments for its Geo network. But any sort of wobble on the launch of 5G services could create a little bit of a sentiment dampener as far as Bharti Airtel is concerned. The fourth stock on this list is Eicher Motor, another name from the automobile space, and clearly not surprising given that that sector has been one of the best performing sectors this year in the market. Clearly a comeback kid. Eicher Motors 2 years ago was written off. Nobody really wanted to touch the stock. There were a lot of concerns about chip shortages, whether people, whether there was enough demand for the company out there, but clearly it has been the comeback kit in the Nifty 50 on the basis of a very strong growth path. Now, the outlook for Eicher Motors is likely very strong because of the fact that the company has indicated that they will launch a slew of products over the next 12 to 18 months. Their recent launches, such as the Hunter, collection of bike, has been a relatively successful story on the road. So clearly giving confidence that there is strong amount of demand as far as Royal Enfield is concerned. The only trouble could be if we see any sort of weakness in economic growth next year. Of course, there are fears of recession in the US, in Europe, how that will affect our economic outlook. that could have an impact on demand, given that Royal Enfield generally can be categorized as a consumer discretionary product. And lastly, of course, from the PSU space, the only lone PSU name on this list, and that is Coal India. Now, it has had a spectacular year, but ICICI Securities is of the belief that the strong performance that we have seen from Coal India the past 3 to 4 quarters is likely to continue going ahead. International coal prices still remain quite elevated. There is a very strong power demand at this point of time in this country, led of course by the industry as well as the consumer market. So given those two situations, and given that the supply of coal has not really improved as much as demand has risen, clearly there is an imbalance in the market, and that is beneficial as far as Coal India is concerned. And lastly, of course, it's a high dividend play. You generally tend to get a good dividend yield on Coal India. The only threat though could be possible, stake sale from the government. Government is liable to utilize this rally to, trim some of its stake and, add to its divestment income for FY23. Whether that happens or not, there have been some murmurs in the market that an OFS could be on the works, but we'll have to wait and see. But if any OFS does come out, then that could be a short-term dampener as far as Coal India is concerned. On that note, let's quickly take a market check. We are just 7 minutes away from the closing bell, and at this point of time, it looks like we are going to have a healthy close. The market has come off, of course, about 50 points from the record highs that we touched earlier, but clearly we are going to have a green close on the market. Is the Nifty mid cap and the small cap space? They are the outperformers today. In the Nifty mid cap 100 index, higher by about 0.7%, small cap index higher by about 1.2%. So small cap takes the bait in today. Surprisingly, the India VIX index is actually quite strong, clearly indicating that there are some nerves creeping into the market. Natural to happen given the fact that you have hit record highs. There are certain investors who will likely think that maybe a correction is due, and that is why you're seeing a lot of put options being bought at this point of time in the market, and that is contributing to a 1.3% hit on the India VIX index at this point of time. Moving on, what you ought to watch out for? Well, of course, there is not too much in terms of data point, but there is a lot of speeches from Fed members, especially Fed member Bullard and Williams will be speaking later today. So do catch that. I think a lot of indication, people might get a lot of indication in terms of where the Fed policy trajectory is heading. The minutes, of course, indicated that Fed is contemplating smaller rate hikes. Whether that happens or not, or whether they reassert that or not during the speech, would be very important for the market. And apart from that, of course, tomorrow Germany's November CPI inflation data will come out. It will be released during our market hours, so that could of course also have some sort of effect on how we trade tomorrow. So those will be things to watch out for. And on that note, we wrap up the show. Please keep commenting, please keep telling your views and your thoughts on the comment section. You can find it below your screen, and of course keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com. That is the only place for you to be. We'll catch you tomorrow morning at 9 a.m. Till then, have a great day.